we are very pleased to have Mr. Gavin John Rezos to join us. Gavin has many years of Australia and international corporate, project finance, and investment banking experience. He is the chairman of Vulcan Energy and Kuniko Limited. He is also the principal of Viaticus Capital. Welcome, Gavin.
Thank you, Hannah. Nice to be here.
Thank you so much for joining us for today's interview. Gavin, the fund you manage began to invest in lithium mining stocks several years ago, including the stock Vulcan Energy. Could you please share the investment logic at that time with this company?
Certainly. Over the last 20 or so years, we've always looked for opportunities in the market where the market will come to us rather than us saying to the market, you must look at this. And we looked at the green shift, which is the move because of climate change in particular to different sectors of the economy where whole areas have to retool. So electric vehicles is sort of the tip of the spear for a lot of people. And when we saw Norway go past a tipping point usually 5% saturation of the market, and it went past that, heading up towards 60, now 90% EVs in Oslo, for example, you can see the uptake. So we also saw in China that there are a lot of environmental issues stemming from the rise of industry very quickly, but also environmental disasters from climate change. So China was also moving quickly in the EV space and the green shift.
Yeah.
So looking at the size of the Chinese market and what Europe is doing, and Europe can be a leader in the regulatory side and China on the delivery side and also in the innovation side, we thought, well, okay, the way to play this is battery metals. Batteries themselves, the technology is complex in terms of getting these things into the market. And there's so many different types and varieties. You don't know which one will actually end up winning. So the best way to play it was in lithium as the mainstay of batteries. The fact that it's been around since the late 70s means industry is well accepted it. Copper, because Dr. Copper tells us if the economy is going well or not, is essential in all types of industry, particularly where anything involving conductivity and electricity. And then cobalt and nickel. Cobalt because it occurs in places most people don't want to go, in particular Congo, Russia now. And so cobalt becomes more rare. And nickel, because nickel's not so easy to mine. And it's an essential element of batteries. So that's where we went into the green shift.
Thank you. There are a large number of junior exploration companies on the ASX. Some people think that investment in such companies is speculation or even gambling. Do you agree with this view? And how do you view the investment opportunities in the mining and the materials sectors of ASX?
It's a good question in terms of which market you're investing in. So on the ASX and the TSX in Canada, these markets have over 100 plus years, 150 years in exploration type businesses, so material sector mining business. And there's no deep liquid venture capital market in Australia or Canada, for example, unlike the US and Europe. So there's grown up for many, many years people with a sense of risk and reward, having their portfolio sometimes to excess, but typically at least for institutional 5% and retail sort of 10, 15% in high growth stocks, whether it be mainly materials, but also latterly the technology sector since the late 90s. It's not gambling if you do your homework and you're backing the right people in the right sector.
That's right. And so since the outbreak of COVID-19, many technology stocks have experienced high volatility. What do you think that caused the large volatility and decline in technology stocks? From a medium-term view, is now a good time to buy technology stocks?
So the first point is what caused the sell-off.
Yeah.
The saturation of Netflix. So when Netflix first announced that they had a decrease in subscriber numbers, that got a lot of people thinking about the social media universe, and the communications universe was saturated. So they started selling Netflix. And when Facebook pivoted towards Meta and all that huge expense at the time, because of those issues, a lot of institutions started selling tech stocks. When you combine that with rising interest rates in a period of recession, then people were getting out of consumer discretionary on the tech side. And that then impacted all technology, where people throw what we call the baby out with the bathwater. Cybersecurity, for example, is an essential element of business and should never have been sold down the way it was. And unfortunately, the Australian market was sophisticated enough always to distinguish between different parts of the technology area.
ChatGPT and AI concept stocks get a lot of attention recently. Is this just a short-term speculation, or are there some real opportunities for medium to long-term investment?
So machine learning, AI, has been around for a long, long time. Machine learning since the 1940s. Terry Roberts, the CEO of Whitehawk Cybersecurity Company, was doing AI with US Naval Intelligence in the 1980s. There's a difference. Machine learning simply is a set of rules that a machine learns from and builds upon. AI is basically where the machine develops a capacity to make its own judgments. We're a long, long way from AI. The issue we have is that the universe of AI is limited by the information you give it. It can't make things up. So we end up with a lot of false information because the information is not correct when it's given to the machine learning or AI program. So in the short term, there's a buzz around it and speculation because more people are aware of it, which means weight of money is going into it indiscriminately. So, for your listeners and readers, it's a case of follow the money, but be very nimble and get out quickly, because when it goes wrong, it'll go badly wrong.
Thank you so much for your sharing. So how do you view profit-taking and stop-loss strategies in trading? For example, if a stock is bought based on value investing principles and analysis, but then followed by unfavorable market performance or even opposite to your expectation, will you consider stop loss or buy furthermore?
Okay, so it comes down to the fundamentals. Why did you buy the stock in the first place? You may find the stock you bought is in fact the one that you want to be long-term, but there becomes headwinds from changes in the external market or changes in the stock itself or the people involved. So be ready to sell a stock and look to buy back in at a later point. If you believe that the stock was unfairly sold down or because of wider market issues, it's a buying opportunity. If it's not one of your core fundamental positions, but it's something that you were speculating, and then certainly put a stop loss in and move on. Always take your losses first rather than last.
Under what conditions will you consider reducing holdings in a stock? When will you completely close the long position of a stock?
When a company does something that against what they promised, when the market sector does something which makes it impossible for the company to succeed, regulation, for example, comes in, ASIC makes a new rule so the company can't do its business without human intervention, for example, where the margins are no longer possible, in particular where people join the board that I don't like. The right people always do the right thing.
Correct. So if you were asked to invest in 3 ASX listed companies, what industry would you choose? And what criteria those companies need to satisfy?
Okay, so the green shift is ongoing. We've had issues on the last 3 months with lithium pricing. That's particularly related to China, because in Europe and the US, the pricing hasn't been coming down at the same rate. We all know that one of the issues in China is that Goldman Sachs and Morgan Stanley both referred to lepidolite as a source of lithium, displacing or providing supply, reducing prices. Lepidolite is environmentally unfriendly, very difficult to process and very expensive. So we've already seen China stop doing that. They did it at the short term when prices were high. Nowhere else in the world do you do lepidolite. So lithium is still a great place to be. Nickel and copper also great places to be. So materials is still very, very important. Now you'd look in lithium at late stage developers and some very early opportunities. And Kuniko, for example, has got James Bay properties in lithium, which look highly prospective. They haven't had a chance to explore them yet. We'll do so in May. Plus, it's got its copper and nickel in Norway and cobalt in Norway, which are all old mines. So that's well placed. And Vulcan, as we've mentioned before, is now in the development phase, demonstration plant almost complete to turn on. And cybersecurity is the other area we'd certainly go into, because that's an essential part of business. It's like, for the retail sector, it's like having a very good pair of shoes to go out and do your business in. Without cybersecurity, you don't have a business, because the fear of, or the failure is so consequential that you're out of business. So I'd still be, the battery sector, battery materials, and cybersecurity are the two areas I'd be focused on right now.
Thank you. What's your insight from your investment practice this year? What habits do you think successful investors need to develop?
You need to be able to, cut your losses early, as we talked about. Be ready to buy back in when the sectors change, or what the company promised is coming to fruition. And look for successful people. People who have a track record, and also look to what to avoid. So look at hype, understand it is hype. If you want to play, be nimble. Like crypto, for example, that's not something I would go into, because it's actually much more complex than people think, and that is a lottery. And also with cryptocurrencies, governments around the world do not want it to succeed. They can't tax it, they can't trace it, they can't regulate it, they can't control their budgets with crypto. So it's got massive headwinds. That's why it's so volatile. So you can fall in love with the stock, but just bear in mind that it's not always plain sailing, and be ready to be nimble.
Thank you so much for your advice. Could you please share 3 pieces of advice or insight for those who want to grow their wealth through stock investing? So
you need to make a plan. First off, you had to have a combination of, well, if you went to an investment manager, they would probably do the old 60% equities, 40% bonds. In Australia, we don't do that so much when we're doing it ourselves. So if we're looking at straight equities, you need to break your equities down into different combinations. What sectors do you like? What geographies do you like? And what size of company? So you want to have some sectors which are very advanced, developed, and paying dividends. So large resource companies or banks, some of the tech companies which are paying dividends. You then need a sector which is growth, so high growth, which is part of your risk reward, but you can still have high growth in a developed company which has got a new market, and that's a good place to be. And then, of course, your more speculative end, it's not gambling, but you're speculating that a small part of your portfolio, the 5% could actually make you 50% of your value. And so that's what you're looking at to do.
Thank you. This is the end of the interview. Thank you so much for your time today. We look forward to talking with you again in the future. Thank you so much.
Thanks for your time.